And maybe that PD array is probably not your forte. Maybe there's another one that's easier. Visually, I think that breakers and fair value gaps are the easiest one to see. But when we're watching price, and it's moving around, gyrating around, that's equivalent to every trader sitting at the table watching the deck get shuffled. Looks fair, right? Everybody's watching the same price. We're all watching ICT talk about the real-time data in ES. Those candles are moving around, the market's being shuffled. And then finally, I'm counting cards. Not candles. I'm not counting candles. I'm counting cards. And I'm going to see when that hand is perfect for me to bet against because I'm running the deck up. Who's running price? I'm running price. I'm waiting for a specific thing to occur. And then I'll ante up. I'll pyramid, add more to the pot, add more to the pot. Letting retail traders feel like they got a chance. I annotate it in my charts. Retail's wanting to sell short. Retail has their stops here. I'm anteing up. I'm wanting that wrestling match between retail logic traders and their harmonic patterns to wrestle me, which is the market. And the market wins. The hyenas laugh for a moment. They get a little nip. But eventually the lion stands up and tears their ass up. And you have 41.93 delivered. You have 41.80 delivered. 41.76 and a quarter delivered. All under the basis of accumulation in the SMT divergence between the NASDAQ lows and the ES lows. That was the stage. I was setting you up for the idea that this is all under accumulation. It's sloppy in price delivery. Yes. Yes. That was the whole point. It's ugly. You have to know what it looks like. Wrestle through that while you're learning. And then if you're wise, you'll say, I'm not going to trade today. Wait a minute, ICT. If you wouldn't have traded today, you couldn't have called those moves. You're right. And guess what? I don't give a shit because these types of moves happen all the time. That's the problem. When you are not versed in what's actually going on and how often this repeats, I mean, I've spent every day with you. Am I deleting tweets? Am I calling things that are outside the delivery of your own chart? How many times do I have to say and show and prove before I can really get you to understand that this is not random? It's not random. I just can't speak as freely as I want to. I want to say all kinds of things, but I can't. So I have to talk like this, which many times frustrates some of you. And you get angry, like I'm doing it to be funny or I'm toying with you. I'm not. I wish I could just talk openly. I can't, though. I have to stay within the language I've created. That's the only thing that keeps me safe. 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 So when you think, but I worked at this firm, we were told that this is what happens, and we see the order flow coming in. You're watching cards being shuffled. You're sitting at the table. You're just right next to the dealer, shuffling the cards. And you're going to call yourself the market maker. You're neither. You're not a dealer. You're not a market maker. You're a participant. You're a player at the card table. Price is coming and going, whether you deal in it, trade in it, or not. It's equivalent to when you miss a move. You may have seen, oh, 41.80 is going to happen. 41.93, I saw that coming, ICT. Before you even mentioned it early this morning, I knew it was coming. That's great. It's wonderful. If you don't take a trade on it, what's it feel like afterwards? Well, I mean, I saw it coming, but you didn't do anything with it. That price was going there regardless. It was going there regardless of whether ICT mentioned it or not. If ICT would have slept in today, and admittedly, I wish it would have, I'm tired, it would have delivered that. I explained to you where it was going to go, why it will go there, because that's where the orders were. Buy side was resting above that 41.92 relative to the daily chart. Why should it have gone there? Because that's where large funds are. That's where the liquidity is. The algorithm is coded to go to those intermediate term highs like that on a daily chart. And that way, it allows the market to absorb and utilize that liquidity that will be invariably resting above that. It has nothing to do with buying and selling pressure. It has nothing to do with it. Zero, zilch, nada. It is not a factor. You ever play, my son, my youngest son, he had this game on his phone. Admittedly, I was addicted to playing it once he showed it to me. I just don't remember what the hell the name of it was. It was like this little worm thing or snake or something like that. And it would you steer it around and you eat all these dots, but you can't touch another snake or you can't touch the edge of the area you're playing in, or you have to start all over. And the more dots you eat, the longer your snake becomes. So in a lot of ways, and I tried to communicate to my son when he was playing, I said, price is just like that snake game, where it just goes around constantly eating liquidity in bigger moves. And like look at the chart today from 9:30 to now on a 1 minute chart. That's a snake. Okay, that's grown. Every new candle has consumed liquidity. It's moved to an inefficiency and it moved into liquidity. That's all price is doing. That's all it's doing. It's predetermined. It's going to be doing whatever it's designed to do from midnight in New York local time. It's established. That's the way it works. And I don't give a fuck who doesn't believe it. I don't care. But I'm not going to arm wrestle any of you past this day today. I'm not. I don't care. You either see it or you don't. You don't want to subscribe to the view that it's algorithmically driven and you just want to trust the things I'm teaching you. Great. You'll do no harm to yourself by doing that. But I'm tired of these fucking clowns. Okay. These idiots on fucking social media making videos pretending they have a fucking clue. They have no idea what they're talking about. Zero. Zero. And to the professionals that are amongst you, I appreciate the respect and candor that you've shown me, even though you may disagree with it. But I promise you, what you think you know, that's not it. That is not it. But what happens when the market does all these crazy gyrations? That's manual intervention. That's when the gears get turned a little bit and you'll fall victim to that. Like I fall victim to that. I may be in a trade. I may be about to take a trade. I may look to get into a trade. It may take me out, put me in, or remove me adversely. Whose fault is it? Mine. Am I going to say, oh, the algorithm's changed? They're going to beat me up for now? No, that just means I made a mistake as a trader. I got burned that time, and my money management does the work of preserving me so I don't end my career on one trade transaction like most of you new people are trying to do that. You're holding your entire success and failure on the basis of the result of the very trade you're in or about to take. And then when it doesn't go to your way, no wonder you go mentally, insane, crazy, flipping out. Oh, I can't figure this out. Versus it's one transaction among millions of who knows how many trades you're going to take in your whole lifetime. And not all of them are going to be profitable. Not all of them are going to go to your target. I wasn't able to be in on that first run all the way up to 41.80. I got stopped out. Did it change my mind about it? No. You watched me wrestle it today in front of all of you in a day that I wouldn't be trading anyway because I know it's shitty. It's choppy. It does a lot of things that won't make a lot of sense at the time. And I've learned over years, decades, to not demand a whole lot of precision on this day. Now, you might look at this and say, man, that was precise as shit. It's not to me. This is a really cloudy, shitty day. Doesn't matter. I know what the algorithm is likely to do on the larger scale of it. And I'll have to endure that. And I use the short term trader's mindset to navigate through all that chop. The fair value gaps that I was outlining, they did not hold up. And if that would have been used as a scalp intraday, you would have been stopped at 41.58. It doesn't change the narrative that it was going where? 41.80, 41.93. Let that sink in for a minute. One transaction, one expectation and price, not panning out does not completely cause the market to want to reverse. All right, we didn't get that trade. It was a reversal. We got to go the other direction now. No. And for many of you that watch me, if it goes to a target, that's not an invitation to go the opposite direction. Like, I'm not trying to constantly be in the marketplace, and I'm not trying to teach my students to worry about reading price action like that. Can I sit in front of a chart like the ES or bonds and trade up and down all day long and be profitable? Yes, I can. But it takes a lot out of me. It's a lot of focus. And for what? What the fuck do I need to do that for? What would anybody want to need to do that for?